So we are going to do the 14-1 work together. It is on page 410 in your book if you want to read directions, or just click here and you can view the directions. Notice here it says for negative numbers and there a minus sign, so make sure you remember that as we go. The directions say that a comparative balance sheet is provided for Western Wear Inc. And the income statement indicates that net income was $5,080, depreciation expense was $13,650. We'll need that later on. And it says to prepare the statement of cash flow. So it says basically first to record the appropriate December 31 balances for X2 and X1. So there's the comparative balance sheet it gave you, and you know that we are going to be looking at the change in the current assets, so these three, and the change in current liabilities, these three. So if you go down here, this is the three assets, current assets, the three current liabilities. I've already put the amounts in there as well as the increase or decrease because I'm assuming we can all do that. This is the most current year. The prior year, $77,500 minus $80,000 is a negative $2,500. It decreased from year to year, and they did that for every single one of these. So then let's go ahead and classify each of them. The first three are the current assets, and the next three are the current liabilities. And then we need to say if they're a source or a use of cash. So again, I always hop on liabilities first because I know that if they increase for that, they're a source. So an increase in a current liability is a source, and a decrease in a current liability is a use. And for assets, I know it's the opposite effect. So if it's a decrease, it's a source. If it's an increase, it's a use. To actually prepare the operating activities section. So I'm going to use all of these increases or decreases when I go down to my statement of cash flows. So when I do that, I've already filled out, again, the heading, who, what, when, and the when is for the year ended. It's cash flow from operating activities. The net income number they told me in the directions was $5,080 even. They said depreciation expense was $13,650. So I put those in. And then those changes again, increase, decreases, $2,500, $250, $3,000. Those are going to come down here to the statement of cash flow. So again, a decrease in accounts receivable is a source. A source. So sources are listed as positive numbers. An increase in supplies is a use. An increase in merchandise inventory, also a use, which means I should have negatives in front of them. Sorry, I forgot. So there's how it ought to look for the current assets. Then on these current liabilities, we'll have two positives because they're sources. And then we'll have the negative for the use. So two positive for the ones that were sources of $1,000. And a negative for the one that's a use. I would total all those adjustments. So I would take the depreciation expense all the way down here to decrease in sales tax payable. And I would end up with a positive, so source, sorry, I have the wrong number, $14,800. That's a source of cash. And I had a positive net income a source of cash. So add those two together and I would get $19,880. So my cash provided by, not cash used in, but provided by operating activities is $19,880. And I can already draw kind of the assumption that that's a good thing, that I have a positive, and that helps me to pay anything I need in the near term related to cash. So paying employees, paying for merchandise, paying accounts payable, whatever the case may be. What I need my cash for, I got some. That's a good sign.